time for the panel discussion on the topic India at 75, Past, Present and Future. I would like to invite our eminent panelists on stage. We have with us Ms. Yamini Aiyar, President and Chief Executive of the Center for Policy Research. Mr. Akhil Gupta, Vice Chairman of Bharti Enterprises. Mr. Andrew Holland, CEO of Avendus Capital Alternate Strategies. And Mr. Shekhar Shah, Vice Chairman, ISPP Academic Advisory Council. In a conversation with them will be Business Standard Editorial Director, Mr. A.K. Bhattacharya. The stage is all yours.
Thank you. Will you please switch it on?
I think it's on.
Okay. Good. Very good evening to you all. I thought we had a wonderful session with the minister, and he was so candid, and actually he sort of laid out a plan for the next 25 years, the so-called Amrit Kaal. So this session probably will take about 45 minutes or so. What we intend to do is have a discussion on the past, the present, and the future. I know it's a very ambitious task, but we will try to do that with such an eminent panel here. And we have got this panel with some thought in our mind, which is we have for the economy section, we have Mr. Shah. For the markets, we have got Mr. Holland. And for the corporates, we have got Gupta. And Ms. Aiyar would tell us about the political economy. So for ease, what I would propose is that we try to segment this 75 years and beyond in three broad categories. One would be, let's say, 1947, the Minister talked about 1947 to 1990, which is roughly 50 years after independence. Not really 1990 is 97, but for ease of analysis, let's keep it at 1990. In the next 30 years, which is still a current phase, and then we look at ahead, what the Prime Minister calls the Amrit Kaal, so 25 years. So I would sort of first get a sense from each one of my panelists on how do they see that first 50 years till the reforms began in 1991. And then we will come to the next round, which is what really happened in the last 31 years. And then we'll end the final round of discussion would be on what does it look like going from now. So since Yamini is next to me, let me start with you. And this will also set the agenda. So on the political economy front, how do you see things briefly, what really happened in the first 50 years till okay, let me not say 50 years, I say till 1990. How would you look at that? Sum it up for us. What was the past like?
I think perhaps the greatest achievement that India holds on to strongly even till today is that we embedded the idea of a democracy in a country which was widely seen with some degree of skepticism by the rest of the world when we adopted the democratic path that we chose to within our constitution. The expectation that a country with deep inequalities, deeply entrenched forms of social discrimination would actually be able to survive, not just survive, thrive as a democracy, is one that most believed impossible. And I think we still, even today, despite all its warts, defy the imagination of the possibility of democracy being so deeply embedded. The challenge, and in some ways, democracy became increasingly competitive. The first 20 years, we saw Congress party, single party dominance. We moved into a more competitive political structure after 1967, that multi-party competitive system, particularly with new pulls and pressures from the states, the subnational regional parties, continue to play a really important role. And I think particularly leading up to the 1990s, since we're stopping there for the moment, the deepening of democracy as a space that provided access to state power, particularly in North India, of historically discriminated communities, the emergence of the OBC, the lower caste, the Dalit mobilization into the political landscape that sort of in some ways catapulted B.R. Ambedkar into the most prominent figure that is in shaping continuously, even today when all other historical figures are up for dispute, there's one that simply isn't. There's a reason for that. And I think that reason it comes in the form of the greatest gift that democracy has given us. However, the big challenge has been that while democracy was...
You mean the challenge till 1990?
The challenge till 1990 is that even in this phase, as democracy deepened its roots, it deepened its roots much more in the form of electoral competition. To some degree began to open up spaces for more substantive capture of state power by historically discriminated communities. But it did not translate into substantive democracy, by which I mean particularly a democracy that was able to deliver on socioeconomic rights of all citizens. So we've always had this tension in our democracy between individual rights, group rights, and the underlying sort of challenge of communalism that was in the shadow of our emergence in 1947 too, which and other forms of deep discrimination which continue to play today. And one of the consequences of that is that we weakened the state at the grassroots. And when we talk about post-1990, I think we'll come to this challenge because today the real critical issue is why has democracy not delivered on critical public rights, critical rights and public services to all citizens?
Wonderful. Thank you. I mean, just to sort of get it right, what you are saying is this, that the emasculation of the states began even before 1990.
Absolutely. Absolutely.
Okay. That's an interesting point. I think this is exactly the setting where I would like to bring Shekhar in on the state of the Indian economy in the first 50 years ending at 1990 for my own thing.
Thank you, Ashok, and thank you to Business Standard for having me here. In a sense, Yamini has already set the stage for what the economy was doing in terms of whether it was able to provide the kinds of public services, whether provided by the private sector or by the state to its citizens. But just going to the very start of our democracy, there were a lot of predictions about how we would fall apart, how there was not going to be this kind of deep commitment to constitutional rights. But as we saw, that was the foundation to the republic and to social and economic progress. We adopted a Soviet-style economic framework, believing in the power of the state to know what is best for its citizens through our various 5-year plans. We tried to make sure that we were able to allocate resources to the kinds of industries and to the kinds of products that were believed to be important. We also had very major ideas, which turned out, of course, to be overly optimistic, of how we would be able to deliver on education, on literacy, on employment and jobs, on gender as well. But those clearly were perhaps far-fetched. On the hardcore economic progress, as we know, the means to the ends were probably not the right ones. We did not take advantage of the private sector that already existed in India at that time. There was this sense that, and we gradually went into the license Raj. Annual economic growth.
Well, we nationalized, no?
We nationalized as well. And annual economic growth during these 45 years, I believe, came to something like 3.5%. and per capita income averaged less than 1.3 or 1.4% over this 4 decades. So that in itself, with a rising population, with the ability to want to meet the expectations of this rising population, led to a lot of discontent. So overall, this was obviously a period when we could have done a lot better. When you look at other countries in mid-1940s, whether they're in East Asia or in Latin America, clearly India was in many instances ahead of these countries. And then looking at their performance over the next 20, 25, 30, 40 years, India clearly fell behind in a major way. Nonetheless, what we are enjoying today, and I guess this is getting into the second part of your question, the kind of technological assets that we've created in our human capital so that we are the leading lights in the digital world now in terms of human talent, being able to service industries, being able to create new industries. Those things also strangely have a root in our insistence on high quality technical education. You know, when my parents were talking to me about what would you like to do, son, in their minds, they thought I was either going to be an engineer or a doctor.
Yeah.
And that was the way in which a lot of people thought. And we were not sure of the dividends that that policy was going to pay us. But today we are reaping the tremendous leadership that India enjoys in these areas. So there was some good to that as well. But at the same time, primary education suffered, and health suffered, and a range of other things that could have been dealt with, which those other countries that are competitors actually dealt with right there and then.
So what I understood from you, Shekhar, is that we became a little of a statist society.
I would say a lot of a statist society.
Yeah, but at the same time, because of democracy perhaps, there were also moments when some of our leaders tried to break free from those shackles. Lal Bahadur Shastri,
yes,
even Mrs. Gandhi in a second phase, and Rajiv Gandhi also did try until Bofors undid him.
Yes.
So would you agree with that? That
yes.
There were attempts, but I think we are not in...
I think there was already a realization that planning and central planning was not giving the dividends that were expected. There was a clear recognition that the states had to play a much more important role in a federal entity. So all of those things were driving our leadership to begin to think about alternatives.
Fantastic. I wanted to come to Andrew on the markets, but I think I will first go to Akhil on corporates. How do you see, looking back, the Indian corporate sector, the corporate scene was like till 1990, my abiding memory of India Inc. was that they were always afraid of competition. But if you want to correct that impression from 1947 to 1990, what really happened with India Inc.? They were, of course, constrained, but please have your say.
Well, very clearly, the corporate sector was in a mess because our country did move towards socialism, and there were reasons. We were very poor. During that period, we had 3 wars. Can you imagine in that state of economy at 62, at 65, at 71? So one can today argue that we should have gone into the arms of US at that time. We made a wrong turn, went to USSR, but that's history. The fact is there were compulsions. Some very bad economic decisions like nationalization of banks. Obviously, from the corporate sector point of view, nothing could have been worse. When we should have been...
Yamini would not agree, I'm sure. Please go ahead.
That's the beauty of the panel.
Go ahead.
But the fact is, when we should have been thinking of more and more private sector participation and privatizing the public sector, I think we went in a reverse direction at that time. So 1990 up to that point, definitely the all economic policies and the fiscal policies were such, taxation policies were such, that it was not very conducive for the corporate sector. But one thing which I think we all forget and which I do feel we must remember is this was the period when our institutions in the country were really made strong. I mean, let's not forget, we remember emergency, but we should also remember that it's the same country which overthrew Mrs. Gandhi after emergency, and there was a very smooth transition of power. It wasn't that somebody just came and occupied the seat. So that transition from a state where Congress was the single party to a multi-party system, opposition coming into power, I think those were good things which happened. But from a corporate sector point of view, I think some foundations were being laid. Maruti had started, that was a big step towards private sector coming in. Of course, there were big industrial houses, but you could see that by end of 90, there were seeds being sown for the corporate sector.
So,
In 1990, that decade was a golden period for private sector, especially the sector I come from, telecom.
I mean, essentially what you're saying is that that was also the phase when institutions were built, IITs, IIMs, and the temples of modern India.
Not only that, but the basic democratic institutions, separation of judiciary and executive, and so on. I think you can't undermine the importance of those.
You know, the remarkable thing with Yamini, Shekhar, and Akhil, you have said, 3 different areas that you spoke on, but there was one common factor, which is democracy. And those democratic institutions, that democratic spirit, and that probably has defined so far. We are yet to hear Andrew on the markets. Please go ahead on your understanding of the markets in those years from 1947 to 1990.
I'm an historian of the markets for 47 to 90. You know, I think you know, from where I was sitting in the UK at that time, India was, you know, just wasn't on the radar in terms of a market. And I think the reason for that was a fewfold. One is, and I'll go across years as well, but I think you know, following you know, 47, I think India seemed to be kind of more inward looking, and you know, wasn't you know, letting the world in. And I think if I just kind of think about that in terms of, you know, India is one of the few countries, maybe the only country, I can be wrong, that moved from agriculture to services and missed out manufacturing altogether. And you know, that's a big miss. Now, I'm not saying it's all to do with inward-looking policies or anything like that, but if you think about it, it took India, was it till 2006, 7, 60 years to have a $1 trillion economy. The next $1 trillion came 7 years later, and the next trillion came 7 years after that. That's the, you know, and we'll talk about the potential, but I suppose that's where India was up until 90, was that it wasn't, from a market viewpoint anyway, one, it wasn't open. If you remember those in the markets then, you had those jumbo certificates, you had transfers and certificates. So there's a lot of things that, you know, foreign investors would not want to come to India at that point. So that's where I think we are.
Absolutely. I think the markets almost virtually, except BSE Sensex had just come in 1987 or so, and Nifty was not there. So the markets were just not there. There was no regulator. It came in only in 1987. So you're absolutely right that the markets did not really make much of a difference to society as such. They did, I think, the post-90. So let me start with you on that phase. The second phase, which is from 1990 to now, how have markets fared and performed in your view?
I mean, it's obviously had its usual times when it's been volatile and mainly to do with global meltdowns rather than, I mean, there has been, don't get me wrong, there has been some of these scams over the years as well. You know, fortunately, they're becoming less and less as the regulators, you know, put more stricter rules on how to kind of buy and sell shares. So I think that's the good news for the markets as well. We're moving away from those sorts of problems. But from a market perspective, the way I think about it is, if you look over the history of the market since that time, usually the market cap to GDP is going to be around that 70 to 100%, sometimes over. So if we're saying that the economy is going to be a $5 trillion economy in the next 3 years, and if I think earnings are going to continue to grow the way they've been growing, then I can quite easily think about how large the market cap of India will be in 3 to 4 years' time. Now, obviously, they're going to work out which sectors would be performing and doing well in that time. But that's a kind of an easy kind of rule of thumb in terms of gauging where you think the markets are going to go over a longer period, is to gauge it to the GDP of the country, and therefore. So I think everything that I've seen. So again, from the first days when I came to India, which was 25 years ago, from the transfer certificate to DMAT, to the regulator, putting more rules and regulations there, and the fact that I'm just thinking back to '97 when we did it was at Merrill Lynch. We did our first conference, for foreign investors. I think about 10 turned up. And the last one I did, I think in 2006, 250 turned up, and I'm sure there's more and more people, foreign investors. So India is on the map of everybody in terms of a market from when I first came in '97, and that's the good news. And it can only kind of increase from here, is my belief.
One question which often comes up in many discussions, that the Indian stock markets have seen too many scams in this period. How would you look at the frequency or incidence of scams? Harshad Mehta, Ketan Parekh, UTI. Is it normal on a time span of maybe 30 years? Is it okay, or what do you think really went wrong, or what could have gone right?
We always kind of gets to me is that everyone looks to India and says, "Oh, you've had this scam, you've had this," and they're forgetting other countries that they've had exactly the same things as well. I mean, it's not just India alone that has these. If I look now in terms of the headlines around the world, in the last 2 years, there's been this scam around of fixing the price of was it gold or silver or something? They were fixing interest rates. LIBOR. I mean, that's huge. I mean, that's a global scam. It's not just a India stock market. So I said, I think SEBI and the regulators, NSE, BSE, have all kind of moved very sharply to kind of cut this down, and it's becoming less. Listen, there'll still be problems, as we see in other markets as well. But I think we're a bit harsh on ourselves, to be honest, compared to what I see still going on in other countries.
Akhil talked about institutions. Do you think in the case of the markets in those 30 years, institutional integrity was something that could have been of a certain order, which it was not there?
I think all of these
institutional
things,
independence and integrity as well.
I think these things, kind of evolve over time. I don't think you set down rules of everyone. I'll give you an example in the UK. There was let's give you two examples. Let's talk about the example of investment banking people knowing deals are coming through and buying the shares. That was rife throughout the UK in the 80s, right? Now, they were part of big institutions. They weren't small companies. They were big banks that they were part of. So that happened. If you take the kind of before the dot-com fall, analysts were writing research knowing full well that the companies they were writing about were terrible, were bad. But they did it because the bank was getting a fee income and they got paid bonuses by writing positive research. So, it evolves and regulations tighten around it each time. And I think that's what's been happening in India. And it could be a continued process.
Okay. I'll come to you, Akhil. On 30 years post 1990, India Inc.
Well,
How do you see that?
the reforms.
Yeah,
The reforms
okay.
that
Sorry.
took place in 1992, I think, changed the corporate sector for this country forever. And I'll talk specifically for the sector I come
Telecom,
from,
yeah.
because that was the golden period, the 1990s. 1994, the licenses were given for the mobile services. And rest has been history. We came from an era when typically when a child was born, you applied for a phone in the hope that when he becomes an adult, he might get one particular phone. And from that to a state where in 30 minutes, you, with all the KYC and everything, you can. And today, of course, it's available in every nook and corner of the country. But 1990 was, I would say, a turning decade for the corporate sector, not just for telecom, many other industries. And India, I think, started gaining confidence. Financial sector came up. Like Andrew said, SEBI started, looking at things from a global perspective. I still remember our first IPO for Bharti Airtel was in 2002. And the state of the economy, you can imagine, we raised 653 crores for a 10% stake. That was the highest ever IPO in India till then. So the scales have changed, but that particular IPO or IPOs of that nature put India onto a path where private sector was welcome, private sector started getting celebrated, and of course, after that, you've seen some really rapid progress.
What would you say about the change in the composition of India Inc.? In a sense, a lot of people have pointed out that how the traditional business houses were left way behind, and the new class of entrepreneurs. I mean, in your case, yours is a company that was not launched by any traditional business house, and there are many other cases. So, was it a story of only reform, or was it a story also of, let me go back to my favorite theme, democracy?
Well, intertwined, because with those reforms, normal entrepreneurs started getting a chance of coming onto the central stage. And the fact in corporate world is, if you don't change quickly enough, somebody will overtake you. That is the rule for everybody. Whether you are a very big industrial house or you are somebody who has come up in the last 15 years, if you are not keeping pace, you will be overtaken. And I think that is a great sign of success of India Inc. That some of the orders which were written in terms of rankings completely got changed in these 30 years.
Give me one reason why those traditional business houses, many of them just completely disappeared in this last 30 years.
Well, as I said, did not keep pace with the times, which includes mismanagement, which includes malfeasance at times. So the time required corporate governance, they required transparency. But if somebody was very used to the idea of license Raj, obviously with opening up of the economy, they took the toll.
Mismanagement would include mismanagement of the government also? No.
Management of the government, you mean?
Yeah, I meant that. When you mismanage the government, you are in trouble times.
Yeah, I think those times changed. And people got a chance where, without worrying too much about, pleasing the government, you could not only survive but thrive.
That changed, okay. Shekhar, 30 years, 1990, lot of things happened in the Indian economy. It changed completely.
But it's probably changed more than we perhaps even understood when we started off the process in the early 90s. It was a crisis that drove us into that. But when you look back and you think about high growth as sort of the leitmotif of this period, as I think Dear Nainan has pointed out, there were actually only 2 incidences, 5-year incidences of high growth. One was, of course, in the 2003 to 2007 period, when the entire global economy was really gangbusters, and our exports did dramatically well during that period. The second, of course, happened because of the oil price bonanza that we got in the 14-19 period. So these were 2 very high growth episodes that India experienced. And I think we learned a lot about the ability of India to compete under the right conditions, as well as perhaps to some extent the inability of India to take the dividends from these high growth periods and plow them back into that part of society and that part of the economy that hadn't done well. And I'm thinking of 3 things here as some things that we might have spent more time on and more resources on and more design effort, more effort at monitoring and evaluation of what was succeeding and what was not. And these 3 things are very obvious. They're apparent even today. One is education. And by that I mean K to 12 foundational education, where today we still lag behind many of our comparator countries. Secondly, public health, and this was obviously borne out very pointedly during the pandemic. And third, of course, jobs. Particularly, as I think the minister very rightly pointed out, the movement out of agriculture, when still about 50 to 60% of GDP is from agriculture, 15%, I'm reversing my numbers, 15 to 12% of GDP from agriculture, but more than 50% of our labor force still in agriculture. So that's a very poignant sign of what was not being done right and what we might have paid more attention to during this very important period when the reforms of 1991 liberalized what economists would call product markets, but were not able, because of the coalition politics that followed, to liberalize and to reform factor markets, particularly in labor, particularly in land, particularly in urban. And in a sense, we competed with the rest of the world and competed within India with our hands tied. And I think we could have done more in that era and would have seen even bigger dividends in the years that followed the reforms.
Is there something more to that? Is it just the inability to introduce the second generation reforms as the factor market reforms that you talked about? Or is it because if these 30 years, if you segment them in 3 broad divisions, the first 10 years was some kind of policies, the second 10 years was a little bit of entitlement politics, less of economic reforms, and the remaining 10 years was actually a slide back on reforms, particularly on the trade policy side. Is that a credible assessment? Is that
I think it's very credible. Certainly, the point you mentioned about trade policy, we are seeing a return back to a kind of industrial policy and a kind of protection that may or may not generate the competitive behavior of Indian industry and Indian workers that we absolutely will need to be able to face up to the competition from the outside. So I entirely agree with you that in some sense, the lessons of the early 90s and the early 2000s may not be fully absorbed in our thinking, while of course we laud ourselves in terms of some of the achievements we have made on production linked incentives, the kinds of schemes that we are coming up with, where there is clearly room for industrial policy. But the worry there is that we will not know where to stop.
Okay.
And there will be vested interests that will be built up. The politics of a large democracy demand that politicians not only know what to do, and when they do it, they may not know how to get re-elected after doing what they have done. So that's a bit of a problem in particularly a very large democracy of the kind, where there are tremendous amounts of needs to be met across society. I'd also say that during this period, we started seeing inequality amongst households, but most importantly, growing gaps between states. And in a sense, India became a mixed hodgepodge of having to deal with low-income problems or low-income traps and dealing with what many economists have called the middle-income trap, where you are not only worried about providing basic amenities like clean water, like transportation, like clean air, but you are concerned about innovation, you're concerned about competition at the margins, at the very margins of technology, etc. So we, in a sense, have got ourselves where we have states which, if they were independent countries, would be amongst the poorest countries of the world. And we have states which clearly are in the upper middle income category and have very different problems to deal with.
Okay.
So we are now in a situation where we have to deal with both at the same time. And that creates a complex problem for politicians, for average citizens like you and I and others, and obviously for society as a whole, and for the institutions of society that have to cater to these issues.
Great. Yamini, I think we have come at the right time, wherein how would you see these 30 years? In a sense that, if Shekhar's assessment is correct, which I agree it is correct, that what was possible in the first 10 years was not possible in the third 10 years. So what, from the political economy perspective, what changed in these 30 years that the country is at least dealing with economic policy options in a different way? What really changed in what way and how? How do you see this as a political economist?
So I think we have to take that question also and apply it to how markets have changed.
Sure.
Because the two have sort of gone together. If we think about what was the animating spirit of the 1991 imagination coming off the license Raj, I grew up as a teenager in the early 1990s in a family with three teenage girls. We hated each other because we had one landline. Thankfully, things opened up and mobile phones arrived, and now we're the best of friends and only squabble using WhatsApp. We all lived through what limitations the license Raj placed on the possibilities of individual freedoms, of choice, of empowerment. And we opened our eyes to what the future held out for us. And in that imagination, it was very much about state exit, because the state was seen as the source of all evil. Gurcharan Das's infamous quip of India grows at night when the state sleeps, I think it really captures that animating spirit of the 1990s, at least for cosmopolitan India. And I think that one of the challenges that we had is that in celebrating the exit of the state, we forgot that, in fact, the state needs to be in the right places, doing the right kinds of things. And that requires deep sets of investments. It requires the kind of investments actually that we made in the 1950s. So there's this wonderful new book by a historian called Nikhil Menon called Planning Democracy, which it goes into this really beautiful detail of how we built our statistical systems, how we built, and no matter what you feel about centralized planning, the kind of investment that we made in building these institutions, that's what gave us the fruits that we then built on to create this service-led and very sophisticated financial market when the opportunity arose in the 1990s. We stopped doing that. And I think we actually also stopped doing it with that much care for regulatory institutions that we built post the opening up in 1990, and the failure to build robust regulatory institutions in its nitty-gritty. What is the kind of skill sets that you need? Who are the people that you need to build here? How do you train them appropriately? How do you ensure that there is some political insulation in these regulatory institutions? We didn't do that, and that opened itself up to the obvious pressures of democracy. And the obvious pressures of democracy essentially got us to the twin balance sheet problem that eventually, I mean, there were, of course, the global financial crisis played a role, but the political economy of it, I think, had a lot to do with the failure to invest robustly in institutions and the allowing of democracy to sort of build itself in that way, absent these robust institutions. It also meant that I think for the masses of India, it disproved the ability for markets to be genuinely democratizing. And in this process also, we forgot that there are some markets where the state needs to exit, and there are some markets where the state needs to actually carefully build. One of those, I think, is in agriculture. We just had this very big discourse in India and movement around agricultural, around the farm laws. And while I strongly believe that the status quo is wrong and that we certainly need to get the state out of the way on many aspects of how we manage agriculture markets, the real economy operates in complex ways. What Odisha needs is very different to what Punjab needs, is very different to what Bihar needs. And in some places, we actually need very, very basic things like market infrastructure. Actually, the state needs to build that physical marketplace for trade to take place. And we never actually engaged with that. So the assumption that the sophisticated financial market and the service-led economy will eventually trickle down brought us to a place where we certainly lifted a large number of people out of abject poverty. But we were unable to do that middle. We failed to understand the shifts that markets were going through. One of those critical shifts links up to Shekhar's last comment about the inequalities within India. So the assumption always was that you would eventually see convergence, which happens. So you start with inequality, growth leads to inequality, eventually you get convergence, and India has disproved that. We disproved the world on democracy, we also disproved the world on how economies grow. We've seen only divergence, and it's very unlikely in the near future, near term, in the next 100 years, I think that we will see this convergence taking place, short of a miracle. So in all of this, how markets operate have also changed, and therefore the political economies of markets have changed, which means that we need a new frame of reference for how we think about factor market reform. There's no question that we need to reform factor markets in ways that actually genuinely build economies at the local level and enable all citizens to participate in market. But we don't have the analytical tools to do that because actually we fail to now understand how the political economy of local markets and the real economy work. One good example of this is something that all our policymakers perhaps knew intuitively but failed to take seriously, which was that in the peak growth years, the bulk of employment we created was in the informal construction sector, which are extremely precarious, which are contractor driven. And as a consequence of which, agriculture and actually that 1 acre land is the only safety net for the bulk of Indian workers. Right. So the farm to non-farm link is actually deeply intertwined. How do you do land reform when that 1 acre land is the only kind of safety net that I have? And we saw this in COVID. So as all our workers went back home, they staved themselves of starvation, partly because of NREGA and PDS, but also because they had the ability to do basic subsistence farming. And that also if you look at our labor force data now, you can see that agriculture has been the primary generator of jobs. So suddenly we are now in a new puzzle where we're having a somewhat reversal of a very slow structural transformation. So these are the challenges that we need to build on going forward, which means that we need to understand the political economy of the real economy and get a better handle on how markets are genuinely working and where the state should be in, where the state capacity needs to be built, and where the state needs to exit and exit completely. This also links to the issue of human capital. So we completely, in a funny way, the big debate of the 1990s and 2000s, especially leading into the rights framework of the 2004 onward, 6 onward movement with NREGA and National Food Security Act eventually, and the right to education.
And information.
It was about the trade-offs of growth versus investment in people, investment in human productivity, human development. But one of the things to remember is, even though we never invested enough, this was also the phase where we did invest somewhat. So think about education. The universalization of education is a process that began in the late 1980s with adult literacy first and then slowly state innovation, but takes off in 2001 at the national government level with the Sarva Shiksha Abhiyan, which was all about building schools. And in some ways, that was a global zeitgeist as well. Build schools, get children into schools, bring in all the infrastructure and inputs. But as we massified education, we had already a rotting frontline state. Rotting because we never actually built it. If you go back to even in 1950s, Nehru's letters to chief ministers were all laments about the failure of the bureaucratic architecture that we inherited and continue and reformed in ways but continue to live with, of being able to respond to the genuine needs of the Indian people. And Prime Minister after Prime Minister, including Prime Minister Modi, have continued in this lament, but been singularly unable to actively actually build the capability of the state as people's aspirations have changed. So what did we do? We assumed, therefore, that our blind faith in markets, now I'm going to say blind faith in markets, will solve these problems. And so has the average Indian citizen. If you look pre-COVID at education data, more children in India are going to private schools than to, in rural India, it's at 40%, in urban India, it's at about 50%. My numbers might be a bit off, but within that ballpark. And most of the state doesn't believe in its ability to do this. But this has huge repercussions on the ability of that vulnerable population, that World Bank's 40% of India that got lifted out of poverty is still vulnerable, to save, to build, to have risk assurance, to be entrepreneurial, and to actually benefit in the market. So it's a sort of lack of faith in the capability of the state, inability of the state to build itself, that has got us to a place where we today spend the lowest of any comparable country on critical public services. And we now have got to a political economy where it's easier politically to say we'll do direct benefit transfers and cash transfers and actually build these core public goods. And that's really the challenge that we confront today. So we don't know how to solve the jobs problem, because that's really about making markets work at the grassroots. We don't quite know how to solve the state capability problem, because we hope that markets will solve it, and they haven't quite. Even going to private school, collectively, you'll still have a situation where 50% of children after finishing 5 years of schooling can barely read a standard 2 text. That's the education challenge. Quality of care is a true health challenge. And these require deep investments in the state. It requires democracy to work. So while we've all praised the India's story of democracy, we should also be aware that that story of democracy is precarious, and it needs to be built up and nurtured much more carefully from the grassroots. So our grassroots institutions of democracy, along with now elite institutions of democracy, need more protection from us as a citizenry. And I think that's where hopefully we'll be able to get to this, the holy grail of building the capacity of the state. So the animating spirit of the next 25 years has to be not necessarily strong state, because that has different connotations, but capable state, delivering state, and accountable state.
Fantastic. I think we have answered what was going to be my final round question to you. Would you like to add to that point? Because I was going to come to the final round, asking each of the panelists, what do they think is going to be one single step that needed to be taken in the next 25 years to make the political economy work better in your case?
So investing in the state, as I said, but let me add 2 more layers to that.
Yeah.
Layer 1 is that much of our discussion on the Indian state and our lament is restricted to the Indian Administrative Service and the Lal Batti Gadi. And while that's most certainly part of the challenge, and we keep hoping that lateral entry will solve it, which I'm not convinced about, the real experience of the state for most Indians is the state cadres, the grassroots state. That's where we need to invest in people, we need to invest in their skills, we need to invest in their training. These are parts of the state which we have forgotten. As the state began to retreat after 1991, and when fiscal rules came in, we started worrying about fiscal deficits, perhaps rightly so. Wages and liabilities were great concerns for state governments. So what have we done? We have contractualized the frontline state. Economists will argue that a contractual contract may ensure you get accountability because you can hire and fire. The truth is that the political economy of the grassroots state does not allow you to do that. You, in fact, end up with strikes, unionization, court cases that then put a hold on actual hiring. So moving away from this contractualization of the state to genuinely empowering the state with workers, with skills, with capacity, that means we should treat state training institutions like we treat Labasna, with the holy grail of where public administration is taught and trained. And the second most important thing is that we third most important thing is that we mustn't let go of democracy. Our grassroots political institutions are the weakest. India is one of the, think about this, between China and the USA, the United States of America, 5 times more public expenditure takes place at the local government level than India. So we have a very centralized state structure. Our political economy is moving. Now we've become one tier, Delhi, whereas it should be Delhi, states, and most important, municipalities and panchayats. We need to reverse that. And that's how the health of our democracy will be saved too.
Shekhar, I'll come to you. One specific idea that you have, which is needed to take us to the next stage as the Indian economy supposed to grow?
We are in very uncharted waters in terms of the global economy. I think there's been a fundamental change in the trading system, in the access and the kind of rule-bound trading system that countries enjoyed in the 90s and 2000s. The Russian invasion of Ukraine has thrown up a whole host of new possibilities and new challenges that we simply couldn't imagine, where financial transactions have been weaponized in a way in which we had never imagined them to be. So we are in a very uncertain world. In that uncertain world, it is very important to be able to manage our fundamentals. And if I were to take a very short-term view of the next year or two, the kind of problems that we will possibly see with the twin deficits of our external deficit as well as our fiscal deficit, and they obviously are closely linked, they will need very sharp understanding, knowledge, experience of handling complex issues. I believe that we are underestimating the dangers from that set of events in the global economy, and we are now fully integrated into that economy.
Okay.
We obviously need to protect what we have, and at the same time, we need to make sure that we don't lose the kinds of opportunities that new changes will bring about.
And the governance structure, fiscal management,
and external management.
External economic management, yeah. Okay,
So let me take the liberty of pointing out 2, actually.
Go ahead, please.
So one is economic, the other is politics.
Okay.
And I'll not talk about, poverty and all that stuff.
No, I was thinking that what should India do?
Yeah. So one, I think whatever we do for the growth of this economy, we need investment. A lot of capex has to take place. And that is when the GDP increases, the incomes increase, and hopefully they proliferate deep into the country. For that, I think what this country very badly needs today is deep debt markets. I think we have a big missing feature in our capital markets. Equity markets are fine. Debt markets really need to become very strong. The corporate bonds which are issued, the G-Secs which are issued, they're all listed, but not traded on stock exchanges. I think the participation of public at large in a transparent manner in debt, and I'm sure Andrew would have a view on that as well, that is an absolute must if this economy has to go. The second part, which I think is more important than the first, is political. And I'll take you back to the time when I had just got into business. At that time, what we were taught was that when you enter into a contract with the government, don't read it. Don't worry about reading it. Sign on the dotted line whatever they have written. And the belief was very simple, that the government and the courts of this country will always be benevolent. Therefore, after signing that agreement, if you come to a situation and say, oh, by the way, this clause was very unfair, they would always say, don't worry, we'll take care. That is one piece, unfortunately, this country has completely lost. Today, the fear factor is such that the worst contracts to be feared are with the government. Because if it prescribes a penalty of, say, 100,000 rupees a day maximum, and there's a minor technical non-compliance, nobody today has the guts to say, I'll not charge you 100,000. And that fear factor, I think, will
Because
kill
that
it.
person himself will go to jail then.
Absolutely.
Yeah,
This fear has got to go. If it doesn't, all the talk of ease of doing business. And unfortunately, it's also the situation with the courts today. The judiciary is also into the same trap. And I think this is one thing which has to change. We have to get back that confidence that government and the judiciary are benevolent. They will take a kind view and always segregate between genuine mistakes, non-compliances, minor defaults, minor delays, and mens rea. They can't be put into the same basket. That fear factor, and I think all of us are aware what is happening to the bureaucrats today. Who has the guts to take a decision where after 10 years of his retirement, somebody could come back and say, oh, this action caused that, well, what do they say? Loss to the exchequer, right? If that persists, we are in trouble.
Okay. Andrew, final word from you on what needs to be fixed to get the markets better, perform better.
I'm not sure what needs to be fixed, but let me try and answer it slightly differently. I mean, maybe it's coincidence of this forum and the 75 years and the fact that India overtook the UK in terms of GDP. Of course, I knew that. That's why I came here 25 years ago. But if you look through Twitter on that day, there were so many negative comments about it. People arguing about per capita GDP versus this versus that. We should celebrate sometimes as a country that we are moving ahead. And it's very simple how I think in terms of the next, whether it's 4 years, 5 years, 10 years. I know two things. I know that in the US, they have, 68, 70 million millenniums, Gen Z. China has 400 million. India has 430 million. I know where the growth is going to be. I don't have to think about this. I really don't. So, if we can grab, everyone says China plus one. Why is it not India plus one? We've got the same kind of population, the same kind of opportunity. And I just think if the government, which I know Prime Minister Modi's, put India on the top table, and rightly so. If we can grasp that opportunity, and which I can see that the government's trying to do, and if they open the bond market, it opens up a lot more kind of money, available money to come into India to invest. That's the opportunity. So I don't know if you need to fix it. I just think you need to grasp it. And if you can do that, then all the figures that we see about India being the top 3 in the next 10 years in terms of GDP, it could easily happen, and I think it will.
Okay, fantastic. That's very hopeful note. I have run out of time. I had hoped that I will complete the discussion in 45 minutes and keep 10 minutes for the questions from the floor. But I've already crossed one hour, and Salish is looking at me very angrily. So can we have a couple of questions? If you have any questions, please feel free. Yeah. Go ahead.
Is there a possibility of meritocracy at 100? Currently, we are talking about India at 75. Is there a we are talking about deepening democracy. Is meritocracy the solution? And is there a way to achieve it?
If we invest in our education systems from the bottom up, absolutely.
a big if, but
It's an if.
Yeah.
It's a massive if.
The fact is, meritocracy is already there. How would you have so many startups if there's no meritocracy? There is meritocracy in the country, and it will only strengthen as we go forward.
But the historical discrimination does not allow for. I mean, the challenge with India is intergenerational mobility is so low. So, how do you build meritocracy in that context? And that's where investing in people, I think,
So
alongside
that
with
we are
democracy.
talking of building merit. If you can build merit, meritocracy will happen. But problem is building that merit.
Yeah.
This is not a question, rather apprehensions. What steps are required to repose the confidence among the retail investors post LIC fiasco? Because a lot of hype was created and even the banks were open to accept the application, which hitherto never happened in past. And see the result. People also believe in the success story of Maruti, which came in IPO 20 years back at rupees 125 only and now hovering at around 9,000 rupees. So a lot of disinvestment is there. So something should be done to repose the confidence among the small
Your
investors.
question, Andrew. I think this question, your name is written on this question. You answer.
So what's the question exactly?
The question is, what needs to be done to revive confidence of the markets, which have been badly shattered after the LIC fiasco? I don't know whether it was. Am I right? Am I?
Yes, LIC fiasco.
Right. I'm not sure I'd call it a fiasco, but it's all about valuations, right? And I think we all got perhaps a little bit too close to a company which we all know, and people hold policies. So there's that kind of loyalty towards we must have this as part of my portfolio, and it hasn't worked. It will work in the future. I don't think we need to it's all about how that was valued at that point. And I think there was enough warning signals, there was enough written about it in terms of to try and dampen down expectations. But of course, I think emotional aspects got in the way. And I can name many companies that have listed that's happened to. Not just in India, but in other countries as well. So I think the faith is, you should keep the faith in the company. It will do well.
And one more thing.
No, I think let's sort of. You have another question?
Yeah,
Okay.
small question only. Yes, very brief. Indian stock market has been best performing in last few months. And are we immune to what is happening in the worldwide?
Okay.
I've been talking about that in the last few days because all of a sudden a new narrative has come out. India's decoupling. India's decoupled from the world. And, the last time I remember this was 2007. And we know what happened in 2008. So we can't be decoupled from what's happening globally. If there's a crash of markets for whatever reason globally, money will be taken out. Risk gets taken off the table. Money will come out of India. Now, would we fall as much as other markets? Maybe not. So relatively, we're going to be okay. Have we decoupled? No.
Good. I think this brings us to the end of this discussion. I must, it's customary to say that it's a rich discussion, but to be honest, this was probably one of the richest discussions that I've taken part in on this very, very difficult subject to cover in about an hour's time. And I don't want to sum it up, but one takeaway which I have is that when we had the first part of the discussion, there was unanimity of views almost. The second part, there was still some unanimity and people were hopeful. But in the third part of the discussion, I saw a lot of differences of opinion emerging. And I think that sums up the way, the direction in which we are moving, whether it is the markets or the governance or the economy. So with these words, I will bring this discussion to an end. Thank you to my panelists.
Thank you.
And I will ask Yamini to come to take charge of.
Thank you so much for that Wonderful discussion. And, there was a lot of ground covered in 1 hour. And you also turned the spotlight on the ground that needs to be covered as a country, and also things that to be mindful of and the opportunities to grasp. So thank you very much.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.